I don't see a huge change because the change is just going back to where we were and in a watered down fashion in 2000. So the full refund of franking credits only came into account in the year 2000. And under this new proposal, and remember it's a proposal, the ALP, they will still refund franking credits to pensioners and so Centrelink pensioners and to charities and foundations. So there's a large swag of the market. We have quite a few charities and foundations. We know we have pensioners on our books as well. But for taxed investors, you can still use a franking credit to offset tax payable. So the vast bulk of people will still get the benefits of franking. Yes, there will be some retirees that are self-funded retirees are really the ones under the hammer where they may actually not get those refunds. But the vast bulk of people will still get a refund of franking credits. Well, I don't think there's been any developments actually. We haven't seen any changes mooted since late March. There's clearly been a lot of analysis, a lot of discussion by people about how it may affect them. But given that we're still 9 months away from election, yes, the Labor Party look more like probably winning that election now given recent events, but they still need to get this through Senate, and I think it's still pretty divisive. So I think we still need to be, have a wait and see on this approach, because I think there's a reasonable chance that it either will never see the light of day, it'll be stuck in the Senate like the corporate tax cuts, or that it may be further watered down, in which case we'd have to reevaluate whatever finally comes out. We've done a bit of research on in fact it was done for another reason, but it's very relevant here, which was, if you're allocating between Australian shares and global shares, what's the difference that franking makes? In this case, for some people, will be taking that franking away, so it's like, okay, what does that difference mean? And I mean, it depends a lot on risk aversion and everything else, but roughly speaking, your proportion in global shares versus Australian shares probably should go up about 20%. So if you're 60% Australian, 40% global, you probably should flip to be 60 global, 40 Australian. Because that's the value. Franking credits are about 1.5% per annum. So that's losing that value means that, returns on Australian shares will be a bit lower, relative to global, so an incentive to move more into global.